Let's continue the report. Now we have talked about the candlestick. We're going to look. I have to stop because I don't want to be going. I don't want to be going down. Right. Don't go me. So now we talk about another thing we have to look at. Very, very important. It's called broker, because you cannot trade Forex without a broker. Broker are set of companies that enable you leverage to trade the financial market. Earlier, before now, me and you could have not been able to trade the market.
Sorry, stop. Please, broker what?
Brokers are companies that give you leverage into the financial market. Or brokers are companies that provide liquidity to the market for you, provide liquidity for you. That's the work of broker. Provide liquidity. This is their work. They give you liquidity, or let's just say leverage / liquidity. That's what broker do for you. And without the broker, you cannot trade. So if so, why are these guys so good? You know, there's nothing for nothing. So they're not being good to you for no reason. No. Brokers charge you what we call trade. Is this to scare somebody? No. They provide liquidity. Liquidity simply means this market is 7 trillion. Nobody has ever been a trillionaire on earth yet. So it means that it's the whole money on earth that's being traded there. For you to tap into the market, you need liquidity. You need plenty of money. That's what it means. Liquidity is the money. So they give you the leverage by providing what liquidity for you to access the market. But for giving you, you and them agree at the point you want to start. Now you're going to sign with a broker, sign up with a broker. And in the terms and conditions, you agree that when we give you liquidity, we're going to charge you what it calls spread. Is it something to scare you? No. The spread are in 0.000% of whatever position you want to enter with. So the broker spread should not scare you. It's a small unit of your money that is being charged. And broker does not lose. So before you make money in the market, the moment you enter, broker takes the charges. If you're going to make money, you recover the charges and your profit. If you're going to lose, you lose both your initial loss and the broker charges. But sometimes people that even make millions, they are not even paying up to $1. You may not notice it. It's just like it's a small difference in price, ask and big price. If you have been into anything trading, then you hear ask and bid. Meaning that when they ask you to buy something for 10 naira, and then before you buy, that's what they call middleman. Broker is a middleman. You get the point? So between you that you want to buy something and me that I want to sell something, the person that brought you to me, there is always sometimes a percentage being given to you, but it is not as high as the one you see here. It's in 0.something% of your money. So it's not something to fear or to scare to you. This broker got my money. No. The charges broker charge you even maybe with a $1,000 account. No, the account you pay. It's not up to even $2 sometimes or $5. Let's make it not too aggressively cover it. Let's just say $10 out of 1,000, which is 1% of your entire money. I mean, for the world you want to trade the $1,000, you're not paying charges. So whether you are making money or losing money, it's not going to the broker. It's going back to the market. when you are being swept as a liquidity, when market you are liquidity, meaning that it's the market that take your money and pay another person. That's how the game works. That's why you are trading here. Somebody says you should bear it at the back of your mind that you are trading with the bees, the most wicked set of people on earth. It doesn't care whether your father, your mother is sick on the sick bed, and you are using the last money praying to God that God should help you. And if you by mistake you make a mistake, they will squander the money without it. It doesn't give a fuck about anybody. They are in business of making money. And I so much believe that whether you're a pastor, you are a Christian, you're a Muslim, you are whatever, if you are in business, the aim of the business is to make profit. And if I am trading against you, be sincere. You are selling maize, and I'm selling semo. Two of them are for people to buy and cook, swallow, right? So if I come to the market, will you tell me that this woman have not sold anything from morning to now? I should go and buy to her. No, you will still want to sell your own to me because you are in for what? For profit. And likewise, everybody. Likewise, everybody. So the people who were trading against or were trading with, it doesn't care whether it's winning. So the brokers, it doesn't take anybody money, even though sometimes they have fluctuating in price due to the spray and other this thing. Because them too, they need money. But it's not something to worry about. So you charge what you call it. And then we talk about leverage. The leverage simply means if you, for example, this is how the leverage works. If you have $1, a broker may decide to borrow you $500. Now, this is where people sometimes get it confused. No. It means that the money you deposit, for example, $100, it's going to be $100 times 500. You know, it's a big money, right? You are not going to see any other money in your account outside your own. The other money that the broker borrow you is the backup. Is what? The backup. It's nothing but the backup. It's nothing but is a backup. Backup simply means it's like a key that opens a door that you on your own you cannot be able to open it. But when they open the door for you, they leave you to decide what you want to do. So there's some settled level of so the broker money only give you access, but does not give you ability to say you want to withdraw that. No, you don't even see the money. Just a backup that we're there for. But remember that whatever you're going to do is going to depend on your $100. If you're going to lose, it's your $100. If you're going to make money, it's going to be addition plus your $100. So the leverage is to enable you get access to the market because the market is too big for $100. It's too big for $30. It's too big for $50. That's why when you're coming to do trading stuff, you have to do that your work so well so that you won't come here with the scarcity mentality. That's why we sometimes charge people simply because if you cannot afford the charges, then maybe you're not ready sometimes. That's the gospel truth because if you come here with scarcity mentality, they will swallow the one you have, then you will wave you goodbye in a very bad way, and you think that, Joshua didn't teach me well. This is not working. It's working. It's just that we have not been able. That is why I told you this 95%, 95% strategy. Because you are seeing it here now that these people can borrow you $1 million, but you're not seeing the $1 million. So life is spiritual more than physical. So that's how the leverage works. So when we have no the leverage, we have no all of this stuff, then this is now when the thing begins to get more interesting. Get more interesting simply because there's another it's called pips. So pips, maybe you have heard people say pips. Yes, pips. What is pips? Pips is the movement of market from point A to point B. That is the difference because if do you see how this market is being programmed to the point that the changes that can make you even $30 billion is not up to a different dollar. You understand what I mean? The difference that this market moved from one price point, another price point, which when we go to the practical, we're going to see. But for example, let's just say the price of euro USD. Let's just say euro, as we said, we talk about euro USD. So euro USD, most of the time you see that it is like this, something like this nature. Like this nature. You see something like this nature. This is how it is. It means that the movement, it means that the price, you need one, this is what it means. You need $1, 2 cents, 3 people to buy 1 euro. So when you see stuff like this, then it has been like this for decades of years before me and you were born. It has never changed up to $1. That is, dollar, euro become higher than dollar, that you need $2 to buy 1 euro. So what it means is that I told you that the one on the left hand side is the strongest, and the one on the left is the weaker. So it means that anytime you see a price like this, it means that you should calculate it in your mind that, oh, you should remember that, okay, this one, that means I need $1, or the one in front. If it is Japanese yen, I need one Japanese yen to buy the one on the left hand. So as you see it like this, the difference now is that before this price, so how are we going to make the money that the change here, it hardly gets $1. It has been to $1 right from 90 something, long ago, 30, 50 years ago, almost even 100 years ago, that this price has been like this. So how do then people make money? We make money in fluctuation that happens here from this number 3, 1. It can be, sometimes we reach 3 here, but then that is why it called. So the fluctuation here, for example, now let's just say price here now moves to $1. That is, you need $1 to this. So now, as you see it here now, what it means here is simple. It means that from this place to this place, there's a difference in price. This is 3, so this is 6. So you will discover that definitely between these two places, there is a difference. So this difference between this 1.2315 to 1.26789 is what we call, the difference is what we call pips. Some people call it points, but we call it pips. So it means that this movement of price from so point to so point is what is going to make us the money, and is what is going to lose us the money. So before you enter a market, that, okay, this market, you think it will go here, before you know whether it's going to go there or it's not going to go there, the first thing you have to sit down and calculate is one, if this market is going to leave this price to this price, how much did I want to risk? Okay, I want to raise 1% of my account. I want to reach 2% of my account to find out whether it will go there or not. If it goes to this price, if this price was here, and then I'm expecting the price to reach here, I know that from this particular place to this particular place, when I subtract this from this, I will definitely have the difference. And then the difference, as we said, is what? Is my luck, is my pips. So that my pips is what is going to determine whether I'm going to make money, I'm going to lose money. I hope you are following.
Yes, sir.
So now, those pips now are what we are going to, you are going to see them physically, practically, but I just want to frame your mind around them. That, okay, so the difference in price movement from this to this is called P. Then how can I then now calculate, or how can I then now know how many pips is from this point to this point? So you are going to be the one, I don't know if you are using your phone. So let me use a calculator here. I don't know whether you may see the screen, but I doubt whether you will see it. But you can equally be able to do the math from your own end. Do you see my calculator? Do you see calculator on my screen?
Um,
Have you seen it?
it's not showing here.
Okay. Now it's not showing it simply because I don't want to go back and share this one screen again. Because if I share this screen, this one will
No
move.
problem.
So now, what I want to do here is I want to do 1 point. Now you can follow up this is the formula of calculating manual calculation of the pips to know, okay, market have moved from this point, from this money, this point, this money. What is the difference in price in terms of pips? In terms of dollar, I have seen it have increased with about approximately, let's just say, now, if it is money now, we say Euro USD have moved from 1.2 now 1.3 because anything above 5 today we can approximate it. So now you could be like, okay, dollar now, euro dollar now, 1.3 cents. Yes, that means $1.03 to buy 1 euro. But we know that there is ticket and other things behind. So here we take note of everything. So I'm going to do 1 point. You can do it if you can be able to have access to another phone. You can still use your phone while you hear me. Or otherwise, just stay tuned and then you get the formula. What you want to do is that you're going to do 1 point. Two, I think it's 2,315 minus 1.2789 equals to. Now, this is the answer we got. 0.03. Are you taking it down? Can you take it down for me? 0.
Yes, I am.
Good. 0.03639. So it's 0.03639. So now, when you have this figure now, what you want to do now, you're going to divide this figure. Now you click divide by 0.000123. That is, you are dividing it with 0.001, which will be equals to, where this minus come from, which will be equals to 363 pips. Is that so? 363 pips. But this one is on the last side. It's on the biggest side. Because if you have this kind of pips, even in a week, you can celebrate Christmas in Dubai. Because when you convert this to dollar, it's going to be very, 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 very amount of money. It's going to be a very, 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 very big amount of money. So if this is too high, then we can be able to use it. How do you reduce it? You reduce it by getting a new price. But because it's just for an example, when we go to the chart, we're going to see numerous of them. So that is the formula for always getting for always getting your
Pips.
pips. That's the formula. You subtract it, then you divide it by 0.0001.
1.
So you divide it by 0.00. Why we get this big number? Because it's just a random number we use. This is a random number. But if you want to get it accurately when we get to the chart, or I should go to the chart and pick another number, or this one is okay for you.
No, it is okay. So that when we're doing the practical, it will be more understandable.
I just want you to get it right so that when you get it right like this, then you discover that, oh, this is how it works. Okay, that is how it works. That's how we calculate P. So after you have calculated your P, then how do you make the money? Because with pips, I don't make money with pips. We only know that that's the tip. Because calculation with pips should be done before you enter the market. Your duty every day is determine how much you're willing to make. But before you say how much am I willing, you usually remember how much. Or in case if this does not go my way, where is my limit? Where should I say it is not? Because anybody can be wrong. The only person is wrong. Yes, everybody. Maybe God can empower you divinely. And all the trades you take went straight to the south. Very well. It do happen. But as human, that we discovered that the only person that did not make mistake when he came to this world was Jesus, then we should definitely be able to put that part of risk management. So the next one we're going to look at is that, okay, we have now come to terms with what is P. Then how are we going to pair these pips with money, which is the game now to make money. That's the first thing that brought us here. It's not about money. You don't come here to study it. You only come here to know how to make money. But we understand that we cannot just pass through the road of making money without knowing what is pips is all about. So when we know that pips is this, then the next thing we have to take note of is what we call lot size. Now, lot size is the volume, or are the, yes, they are the volume, or they are size of volume that determine how much you are going to make per pips. Lot size are volume, or they are required volume that determine how much you have to make or how much you have to lose. So, you know, volume here in terms of volume. Volume can be in terms of number. I think volume most times in terms of numbers. Or lot size are numbers that determine how much we make in the market or we lose in the market. And lot size, because we say they are numbers, they start from 0.01. Even though there are some that go lower than this, but we won't want to waste more time going lower than this. Now, we have talked about pips and we understand that pips is price fluctuation different from when we enter where we want it to go, and then we discover that it went there. So if it went there 300 and something people, and then we enter with 0.01, what would be our gain? So here now we discover that, okay, not I start from 0.0, sorry, lot size start from 0.01. And then in terms of the dollar equivalent, this is 1 cent. Now, I just want you to, all right, we're almost 10 minutes out. I think this one will be the last 10 minutes. Now, where it's very critical is that this is the least lot size you will enter the market. That's the volume. And this volume represents what? Money. Cent is money. That's dollar. So anytime you enter the market, now pay attention, with 0.01, it means that for any pip the market moves for or against you, you are either plus 1 cent or minus 1 cent. Do you hear that?
Yes, sir.
So it means that your lot size determines how much you will make. Your pips determine your pips determine how much you will make, and then your lot size determines how much you make by the pips.
How much you make by the day?
No, this can happen in an hour, in a minute. As of today, this morning, I entered a trade that I've moved over 30 pips. Wait, I just check it now as it's still moving around that way. And there was a trade around 2 a.m. that I've moved over 70 pips. Now the question now comes back to, okay, the least lot size. That means if I have $10, now on $10, I can trade 0.01 lot size. So per 1 pip, I'm either in plus 1 cent or I'm in minus 1 cent. If the market is going the way I predicted it to be, I am making 1 cent per pips. If you go 30 pips, it's going to be 30 times 1 cent. If you go 50 pips, it's going to be 50 times 1 cent. Do you understand the point?
Yes, sir.
Your money, your capital to start trading will determine your lot. Do you hear that?
Mm-hmm.
Your capital determines your lot size, not that 0.01 standard. No. I don't know when last I paid 0.01 lot size. But if you have $10, you can start there. Now, that simply means if 0.01 is equals to 1 cent, then that simply means 0.09. Sorry, that simply means 0.09 should be equals to 9 cents, right? 9
Yes, sir.
cents, right? So what of now? If it's so, then what of 0.1? So it means that 0.1 should be equals to what? Can you tell us? 10 cents make $1. Do you understand the point?
I didn't hear you, sir. You went mute for a while.
Okay. I said if 0.09 is equals to 9 cents, right?
I still can't hear you.
Can you hear me now?
Hello?
Hello? Are you hearing me?
Yes, sir.
Can you hear me now, like and clear?
Yes, I can hear you.
I said if 0.09. Okay, you can mute yourself, please. Okay. Good. If 0.09 is equals to 9 cents, then that means 0.1 because 10 cents make $1. So it simply means 0. Which is 100 cents. Sorry, 100 cents make $1. But in this scenario, because the 9 could be representing 99, so 0.1 then now is equally means $1. So it means that anytime you enter the market with 0.1, what it signifies, what it means here is that per P is not longer 0.1 cent. It's not longer 1 cent. It's not longer 9 cents. Any fluctuation in movement now, $1. If the market is going in your direction, $1 addition to your money. If it's going against you, minus $1. So if that continues, then that means 0.9 is equals to $9. So that simply means if the market go 10 pips in my direction, that would be 9 times 10, $90. You see how easy it is to make the money? But remember, how much are you trading with? What if it go against 10 pips? Minus $90. Okay. So then what of let's just make it more, look it more. What of one lot size? One lot size should be equals to $10. One standard lot size is equal to $10. So you just begin to understand that, okay, one, if I put one, it means standard. It means per one pip. And the pip can go 50, 100 pips a day, 200 pips a day. So if it go my direction, you just calculate it, you see, wow, $10 times $202,000. You carry calculator, $2,000 times 1,800, 3.6 million naira. And it doesn't work now because everybody will start from small. So leave those calculations. It's a mental calculation. Leave them there. Because in the reverse part, mean that if you go against you, it's going to be minus. That's where greed now took it. When people begin to calculate this greed by hand, plan. Baba, add more lot size, 10 lot size. Because that simply means now 10 lot size now will be equals to $100. You see how this market is presenting opportunities. It means that if I put 10 lot size, it's $100 per pip. And if I have 20 pips, that's 2K, 50 pips, 5K, 100 pips, 10K. That's somebody's lifetime salary in Nigeria. That's because I know a lot of people that they have worked at times and they don't have up to 17 million naira. And somebody is making that money. And a lot of people have made that money. Even right now, somebody is still making it. Okay. That's important. If Joshua could have had capital and he entered 10 lot size, this is something pips now. That's how much, that's almost 70K dollars. That is trading sweet. But when the chips are down, it's not sweet. There's work here to be done. If you're scared of work, you better run. That's the truth about the work. There's serious work here, but there's money here. So I think we're going to stop at lot. And pips. These two myself, they are the major of the majors in terms of the campaign. You have to study these two very well. Even on your own, you have to study lot size and pips to get to know more about them. But when we're going to do practical, you're going to see them every second. So if you don't want to bother yourself and stress yourself, no need, because you're going to be seeing them every day. That's a way we're going to measure them automatic. We're going to measure them manually after we have done it. So it's not going to be something that is for you. So that's how this lot size continues to even 1,000 lot size, 10,000 lot size people trading, 500 lot size people trading. That is how it continues forward. There's no barrier for anybody. There's no limit for anybody. Anybody can do anything, provided the person is willing to do it. So I seriously appreciate your time and your effort and your understanding. Now, this is what we're going to do. For any question you drop it in that Telegram, because there's no time now.
Okay, sir.
Yeah. So stay safe and take care. Drop your questions in Telegram.